Global alert, China sells billions of dollars. China has sold over $21 billion in US Treasury bonds since the beginning of 2024, marking the largest sale ever recorded by the country. In the first quarter of 2024 alone, it got rid of $53 billion in these assets. Although third quarter data is not yet available, it is estimated that China could sell between 5 and 10 billion more. This trend is part of a shared strategy with other BRICS countries, which have been reducing their holdings of US bonds since 2022. The move reflects the interest of developing economies, including the BRICS nations, in reducing their dependence on dollar-denominated assets in response to de-dollarization and the inflation that has affected the dollar in recent years. This year, the US debt has reached $35.6 trillion, raising concerns among those who support the dollar's dominance. Meanwhile, China has been pushing for the adoption of its currency, the yuan, along with local currencies in international transactions, consolidating its role as a leader in the de-dollarization movement. The growing movement by China and the BRICS countries to reduce their reliance on the US dollar is a clear sign of the ongoing global economic transformation. Since the beginning of 2024, China has sold over $21 billion in US Treasury bonds, marking the largest sale ever recorded by the country. This process of selling off US bonds is not new, but it has gained momentum in recent years due to trade and geopolitical tensions, as well as the desire of many countries to diversify their international reserves and reduce their exposure to the financial risk of relying on the US dollar. The BRICS group, made up of Brazil, Russia, India, China, and South Africa, has played a key role in this de-dollarization process. These countries, in their quest for greater financial and economic independence, have begun to sell a significant amount of US Treasury bonds and to promote the use of their own currencies in international trade. This move is a direct response to the growing US debt, which has surpassed $35.6 trillion in 2024, generating uncertainty about the long-term stability of dollar-denominated assets. The massive sale of US Treasury bonds by China, which totaled $53 billion in the first quarter of 2024 alone, is just one part of the big picture. Although third quarter data has not yet been released, analysts estimate that China could sell an additional 5 to 10 billion before the end of the year. This behavior not only reflects growing distrust in the dollar as a safe haven, but also China's strategy to reduce its exposure to US assets, which have been losing value due to inflation and global financial instability. The process of de-dollarization is being driven by several factors. First, the growing US debt is a major concern. The high levels of US government debt have led many countries to reconsider holding Treasury bonds, which have traditionally been considered one of the safest assets in the world. However, as US debt continues to grow, so does the risk of a potential fiscal crisis that could affect the value of these bonds. In addition, inflation has eroded the purchasing power of the dollar, leading many countries to seek alternatives. In recent years, the United States has experienced high levels of inflation, which has affected the stability of the dollar. This situation has generated further momentum towards the diversification of international reserves, especially in emerging economies which seek to protect themselves from the volatility of the dollar. The BRICS countries, and especially China, have been pioneers in promoting alternative currencies to the dollar. China has been leading this effort by encouraging the use of its currency, the yuan, in international trade. Instead of conducting transactions in dollars, China has been using the yuan and other local currencies in its trade agreements, which has allowed it to reduce its dependence on the dollar and strengthen its economic influence on the global stage. This move towards de-dollarization has also been facilitated by the development of new financial technologies. Digital currencies, such as China's digital yuan, have provided BRICS countries with an additional tool to escape the dominance of the dollar. As more countries adopt these new technologies, the use of the dollar in international trade is expected to gradually decline, which could have significant implications for the global economy. The impact of de-dollarization on the United States cannot be underestimated. For decades, the dollar has been the dominant reserve currency in the world, which has allowed the United States to finance its debt with relative ease and maintain a privileged position in the global economy. However, if more countries start to reduce their reliance on the dollar and diversify their reserves, the United States could face greater difficulties in financing its debt and maintaining its economic hegemony. The decline of the dollar as the world's reserve currency could also have consequences for American consumers and businesses. Lower demand for dollars in international markets could lead to a depreciation of the currency, which in turn would make imports more expensive and could further fuel inflation. This could also increase the cost of international borrowing for the United States, as foreign investors may demand higher interest rates to compensate for the perceived higher risk. As this process progresses, the BRICS countries have demonstrated a firm commitment to building a more balanced international financial system. Although the dollar remains the dominant currency in global markets, the de-dollarization led by China and other BRICS countries is beginning to generate a structural change. Emerging economies are finding new ways to interact economically with each other without relying so heavily on the dollar, which could weaken the current economic system that has favored major Western powers for decades. The future of de-dollarization is uncertain, but what is clear is that China and the BRICS have taken significant steps towards the creation of a new financial order. If this process continues, we could be witnessing the emergence of a multipolar world in which the dollar is no longer the only dominant currency, and in which emerging economies have more say in shaping the rules of the global financial game. The increase in the adoption of local currencies and the strengthening of economic alliances within the BRICS, combined with the growing pressure on the dollar due to debt and inflation, suggests that this shift could accelerate in the coming years. While the dollar is unlikely to completely lose its status as the world's reserve currency anytime soon, the trend towards de-dollarization is an indication that the global balance of economic power is in full transformation.